Okay, good evening, everyone. As usual, it's just ticked over 8 o'clock, so welcome to MLA's Productivity and Profitability webinar for tonight. Tonight, we are lucky enough to have Stuart Bull of MLA giving us an update on the Australian cattle market. And I'm sure most of you are keen to get to the footy when we're finished, so I'll kick right into some housekeeping. This control panel will be at the top right-hand corner of your screen. There is an arrow button on the left of the control panel which collapses and reinstates it. You should be able to hear us, but we cannot hear you. So please type your questions in the box provided as Stuart goes through his presentation, and I will relay them to him at the end of the webinar. So introducing our presenter tonight, Stuart worked at MLA for 15 months as a markets analyst after previously working at R.M. Williams in sales and marketing. Stuart graduated at University of Sydney in 2018 with a Bachelor of Commerce. He grew up in Narrandera in southwest New South Wales, the Riverina, on a mixed farming, so sheep, cattle and cropping property. Stuart says 2020 has been a fascinating time to be an analyst, given the year we've had, especially for cattle. And I suppose that's why we've got Stuart on tonight. So we're very lucky to have him on board to take us through what's happening with the cattle market and maybe where it's going. So Stuart, if you're there, I will make you the presenter and you can get started.
Thanks, Hilary. We'll see how we go. I'll try and get you all to the second half of the footy. I'll attempt to get through a fair bit of content in a small time frame, but I hope that you guys get a bit out of it. Let me just get my screen going. Can you see that yet, Hilary?
Yep, that's your PowerPoint slide now.
Righto. All right, thank you for having me. Let's just jump into it. So for anyone who wants to get in contact after this presentation, by all means, feel free to send me an email or jump on the phone. I'll also have this app at the end to follow up. So just to cover what we're going to go through in the next 30 to 40 minutes, I'm going to quickly brush over the current projections outlook. I assume that some of you may have seen this. It came out in October, so I don't want to dwell too much on those numbers, as it's easily, you guys can easily go and find that on the web as well. And we'll be posting an update to that in the new year as well. So keep it tuned for that one. And then I'll touch on the international beef trade, looking at the key export market, and then the evolution of the market in 2020 with more of a domestic focus. And I'll try to answer some of those key questions at the end regarding the rebuild and what the market's going to do in the future. And during this, I'll also touch on the impacts of our COVID-19 as well. So just to quickly run over the recent projections outlook and I guess what the key themes were. The big three were for cattle slaughter to hit 7 million head for the end of 2020, so we're not far to go for that, and we seem to be tracking pretty well. And then the second one is the recovering global food service demand and retention of breeding stock to support the herd rebuild. I'll talk about this one in depth later on. And of course, the impact of the African swine fever still has a critical influence on the global protein trade in 2020. So for those who haven't really been tuning into the market as much this year, I just want to kind of give you a quick summary, I guess, of the key drivers that are underpinning the market this year. Essentially, the easiest way I try to think about it is supply going lower, moving in the opposite direction to demand, which therefore increases prices to push higher and higher, which we've seen with record levels this year. So this is kind of, this has continued to be the case for the majority of the year, and we're really seeing the effects of that now. So just to touch on the key numbers released, so up the top, we've got the cattle herd, which we predicted to hit 24.5 million head by the 2020 financial year. And then that's planned to increase by 1.9% to 25.1 million head for the next financial year. Again, this will be subject to a few things, which I'll talk about later. And then slaughter as well, we're expecting to go down by 17% year on year, which is a decline of around 1.5 million head, with the continued slight decline into next year, and then pushing up higher as the rebuild starts to gain some momentum. Very similarly across production as well, down 15%, which therefore leans on the export trade, down 16%, and beef exports. So what we're sending out down by 17%, with a return to more normal conditions. We expect these to rise over the next few years. And the only one in the positive section is the average carcass weight, which again, off greater access to feed and water, we expect those to rise as well, slightly by 3%. So just to give you a quick kind of visual around where the herd sits and where it's going to go. So you can see the average is around 28 million head, and it's a dramatic drop in the last 2 years when we were there by around 6% year on year to for a decline of 12%. And then so from there, again, we're starting off a very low base. We expect that to rise by around 8% for the next 4-year period, pretty well between 2 to 3%, give or take for that. So again, this will be subject to a few factors as well, which I'll speak about. Cutting into slaughter now, I've just highlighted the COVID-19 period there. You can see, I mean, it was quite a turbulent time for the meat processing trade, given some of the factors that played out. You know, when we had some trade tension, supply chain disruptions, logistical problems. But I think all in all, we're still able to kind of rise above that to a degree. And with the ability to kind of process a decent amount of cattle, considering how low our herd is at. So again, you can see a fair bit of disruption during that period. Again, this is pretty typical during the Easter break as well, during April. And then from there, we've had a continued decline during that period, during the winter and through spring. And we expect this to continue somewhat as well. And you can see it's kind of ticked up a bit in the last couple of months, which is in line with the 5-year average. Look, now we'll have a look at female slaughter. So unfortunately, we don't have the most up-to-date ABS data. However, so this is taken in June. So it's still quite high. Essentially, that female percentage of kill was tracking around 56% on a rolling average basis. And we expect that that has come down quite significantly since then. Unfortunately, we don't have that data, but what we do have is a Queensland and New South Wales breakdown of the female to male slaughter ratio collected by the National Livestock Reporting Service that gets sent out each week. So what this breakdown shows is a pretty clear trend in the amount of females being killed, lowering compared to the amount of males. Oh, what's going on there? There we go. So we've had about an even split for the majority of the first 6 months, which I haven't shown you there, but that's been the case, around 100 to 100, if that's how you want to think about it. And then that's continued to trend down, where currently this week we had around 64 females to 100 males. So there's obviously been a higher retention of female stock, indicative of the progress for the herd rebuild. And just a quick touch on the national cattle prices. So I've selected a few different categories: heavy steer in the green, trade steer in the yellow, medium cow in the grey, and 100-day grain-fed steer in the red. And this is taken across the last 10 years. So the last 5 years, things have been very stable. And in the last 5 years, sorry, from 2010 to 2015, things have been quite stable, with the last 5 years being relatively volatile, where prices have continued to track at historically high levels. If we look, I've just kind of grayed out that CV19 portion. It's quite small, but there's a few key factors that I just want to touch on. So the majority of those ones are heading down, and that was they're mainly for your heavier categories. So things like your medium cow and your heavy steers suffered during that COVID-19 period, and a lot of that was due to the decline in food service demand. So a lot of our meat is a premium quality, which gets sold up into restaurants all around the world. And of course, during COVID, there was all those shutdowns. So yeah, those kind of categories suffered during that. But we did see kind of a large shift of processors looking to kind of produce differently, change their cuts to accommodate for an incline in consumer spending, especially through retail and at butcheries, as well as people try to cook more from home. And the trade steer, which is indicative of younger cattle, similarly to how the EYCI performed during that time, it's actually continued to rise above, just highlighting the demand for young cattle during that time. And a lot of that was driven off southern restockers, as there was a fair bit of rain during the kind of March, April and May period. And Queensland also received some rain as well towards the back end of May. So now I'm going to touch on the international market. So the big three here is that, of course, there's a multitude of factors weighing in on demand, with Australian red meat and livestock exports continuing to contract. And again, just to harp on the impact of the African swine fever as well, which I'll go into more detail. So, of course, it's been a pretty phenomenal year for Australia. So we've obviously come out of severe drought, and then we've seen a huge turnaround in season, so a lot of rain, even some flooding in places, and then worst kind of bush fire season in history, US-China trade tensions, Brexit deals, and then the African swine fever, commodities going crazy during COVID, and of course COVID itself. So it's been a pretty phenomenal 12 months, which has been fun to kind of delve into some of these topics. So just having a look at the beef export volume to key markets. So starting from biggest to smallest, Japan has been our biggest player this year for beef. They're tracking around 9% down from last year's levels. With North America also down similar levels from last year, and then Greater China suffering largely, well, I guess off the back of the swine fever deficit. There was a big increase in terms of our exports to China, as we were able to kind of target a lot of our meat to China. And then I think that was a rise of 62% from 2018 to 2019. And then they've come back quite significantly. And I think a lot of that has come from the reliance on some other markets with cheaper cattle prices and some trade deals strung as well, particularly with South America. And the rest of those key markets down as well. So all in all, down by 11% year on year, which I think when you think about it, it's not too bad considering the year that we've had and the low herd that we kind of have to work with as well. Just a kind of a quick breakdown month on month. There's no real distinct trend here besides that all months are down except for January, with a slight decline during kind of those peak COVID months, so March and April. And then we've kind of really tapered off during the winter, which is generally expected as supply tends to dwindle. As our slaughter tends to go down during that time as well. But we can see back in October, there's been a return to higher exports sent out, which is good news for the remainder of the year. Now, just a quick look at some of the economic factors regarding the global food service and retail trade. So this is a 2020 forecast. The green is food spending and the yellow is restaurant spending. So essentially supermarkets versus restaurants, if you want to look at it that way. What we've seen is obviously is the restaurant spending come down significantly in 2020, as previously touched on, and food spending has actually gone up in 2020 on the back of those factors previously spoken about. And then if we look at 2021, we're looking at the majority of those categories being in the positive for those key markets. And again, that's with the assumption with the return to normal, I guess, normal activity for the rest of the world and those key markets, which would be good news for our trade. And then looking at GDP quickly, so the green is 2020 this year and 2021 is in the yellow. Again, these are all across the key markets. So we tracked down 5% in our total for year on year across the globe, which I guess when you think about it is a significant drop of the total product produced. But in 2021, the forecast is for that to rise up to 5.4%, indicative of that 2020 figure being counteracted slightly, which is good news. Another key metric we like to look at is the household income of US $35,000 plus, and to kind of find where those key growth areas are. If we want to look at where that is, essentially Southeast Asia is where we see a lot of consumers heading into that bracket of being able to afford our meat. So up the top is Indonesia, followed by Vietnam, then China, then the Philippines. So these regions are expected to experience the most growth in the next 4 years. So this is going to be huge for the trade, and of course we are situated quite closely as well to these markets. And of course we can't discount China as well as a major player with huge growth expected there as well. This is looking at a bit of a 10-year forecast for global meat consumption. The first thing that you probably notice is how big Asia is. Again, that's pretty unsurprising off that previous slide. But essentially, the majority of key markets are tipped to go up for the next 10 years, which is promising. But what we will notice is that beef and veal are only a pretty small percentage of the overall global meat consumption, with pig meat and poultry being the largest and sheep meat going down. So I guess the key takeaway is the biggest improvement coming out of Asia. And just a quick look at the African swine fever pork shortage, and just to kind of put it into perspective, in 2018 was when I guess you call it the pandemic hit, and it was a very fatal one. It's very contagious and it spread very rapidly. And we've also seen it enter into parts of Europe as well. So within that kind of 2-year period from 2018 to 2020, supplies fell around 16 to 17 million tonne, which is pretty massive, because when we look at the global beef trade, it only makes up around 11 million tonnes, so not even making up the difference of that 2-year drop. And within that, Australian beef holds, I think it's around 2%. No, sorry, I'll take that back. It's more than that. We're tracking at 3rd in volume during 2020 in terms of what we've been sending overseas, and we're also the highest for value. So despite our volumes not being as high as they possibly could be with current demand, the value that we've been able to achieve of such high prices has still kept us in a pretty good stead during 2020. Now just a quick look at the evolution of China beef imports. This is a focus on Australia, New Zealand and South America. What this shows us is that essentially the emergence of South American countries in their ability to be able to send more product to China. And I guess this has come somewhat to the detriment of Australia. We can see there in the last few years, China imports have really crept up, and again, that's off the back of the African swine fever, and also the impact of our cattle prices as well. So during 2020, you can see we have been trending down. Australia is the bottom rung or the bar there. We're tracking down and have more so in recent time. And I think a lot of that is also stemmed off the current cattle prices. So this next graph shows you where we sit in terms of those kind of global cattle prices, and we are leading the world, so we are very high given, I guess, the exceptional circumstances that we've had during 2020. So we're in the green there. The US then tracking, and then well below are the South American, Brazil and Argentina. So hence they've been able to, again, they are a major player within the market, and they've been able to really tap into that China demand as well. So now let's have a quick turn to the evolution of the domestic market. I tend to spend more time on this stuff, and it's been quite fascinating. So I'm hoping to show you guys just kind of some of the intrinsic dynamics at play during 2020 and the changes throughout times of the year. So just to quickly touch on the eastern states young cattle versus the western young cattle. This is looking at the last 2 years. So we can actually see that the EYCI has been trading at a premium to the EYCI in 2019, and then we've seen a massive flip around where both prices went up during that Jan-Feb period rapidly, and then COVID hit, where the eastern states was able to push on, and again, a lot of that was off the back of increased rainfall, and also after some follow-up rainfall early in the year. I think WA experienced a fair bit of rainfall, some rainfall during the start of the year, and then things quickly dried off. So they didn't do as well during that period. And then since then, we've seen the EYCI continue to reach new heights from there. We had a new record as well last night, so it's just still going up and up. And now just a breakdown of the EYCI. So this is a good one to kind of look at when we're thinking about, I guess, who's demanding price and the relationship, which then affects what margins are brought in between the supply chain. So in 2019, feeders were buying young cattle at a premium. Again, that's no surprise on the back of severe drought. And then we had processors in second, and then restockers were last. Obviously reduced demand for young cattle, and there was a large sell-off during 2019. And then looking into this year, we've seen that rapid incline of prices where restockers have gained dominance for most of the year. And I've just kind of fleshed out during that COVID-19 reporting period. So obviously processors and feeders, again, didn't continue on the rise that the restockers did. And that's going off the back of those factors previously mentioned with the decline of the food service trade, therefore impacting what those finished cattle were doing and just the volatility and uncertainty of the market. And then so restockers have actually continued to really push on from feeders and processors in the last kind of couple of months. So again, what this does to margins is quite significant, which I'm going to show you now. Actually, I'll show you in a sec. I'll just touch on some of the key jumps during this year. So I was just having a look at the different categories of cattle and the ones that experienced the largest percentage change month on month. So first of all, yearling steer, and this was on a live weight basis. They jumped 28% from Jan to Feb, being the largest jump in the last 10 years. Similarly, yearling heifers as well jumped 27%, so very similar, the largest jump in the last 10 years. So we've seen there obviously massive demand, particularly from kind of those southern states. As soon as that season turned, that restocking sentiment did kick in. And then cow as well was the next one, which is an interesting one because they were up 25% in the recent from Jan to Feb, but that was actually below 20, or I think it was the start of 2015, where they're at 26%, so pretty similar. And you can see cow has been much more volatile in terms of that percentage change. And I think a lot of that comes out of just the versatility of obviously cows. You know, you can breed them, you can fatten them up. They're kind of a good thing to have during a time when it's wet. So that's why that has kind of continued to kind of sway month on month. I want to touch on another key variable that's kind of picked up in the last couple of months. So this is in line with the restocker price continuing up as well. So the largest category included in the EYCI is 200 to 280 kilo. And what we've seen is this being able to push away from the other categories as well, which have been pretty stable for most of the year. And a lot of this can be explained by, oh, what's happened there? Okay, that's not working for some reason. Essentially what this was going to show was the profit difference. Oh, hang on, we've had a bit of a technical. Okay, I'll just quickly explain it. So what this showed was the difference of buying in at a 250 kilo weight and the difference of buying at a 300 kilo weight at the current market rate. And what this showed was that the cattle market at buying in at a slightly smaller weight by 50 kilos ended up increasing the profit margin by around 3 to 4%. And that's taking into account that profit margin as a percentage of the original investment and that total sell price, where the total sell price will always be 50%. So that's what I was trying to show there, which would have landed beautifully to that slide as to the reason why we've seen that shift into producers wanting to buy more younger, lighter cattle, just because those margins to kind of feed up long-term diminishing more and more throughout the year. Now I kind of want to show you a bit of a visual representation of how the market has played out from January for restocker steers, and then lending itself to June, and then to current market. So the legend there, the dots that will show the size of them is based on the supply, and the darker the color, the higher the price as well. So this is just to kind of show you how the eastern states has played out during the year. So those key kind of sale yard regions I've selected are Western Queensland, Central Queensland, Southern Queensland, Far North Coast, New South Wales, Northwest Slopes, New South Wales, Hunter, New South Wales, Central West, and the Riverina/Northern Vic. And these cover the majority of, I guess, the key cattle yardings that we have, and the majority of these contribute to the Eastern young cattle price as well. So when we look at Jan, this is what we've seen. So the majority of key sale yard regions are pretty evenly spread around supply, with price premiums being paid around the northwest of New South Wales, and then following that by kind of southern New South Wales as well. And Western Queensland hasn't come in; it hasn't come into the fold yet, as we weren't reporting it then, but it'll come in this next one. So if we look at the difference between January for restocker steers and June, you can see already a massive change in how the dynamics played in that 6 months. So first and foremost, we still see supply really ramp up in Queensland. So those southern Queensland yardings being primarily Roma and Dalby, contributing to that, with also Western Queensland having a lot of cattle, and Central Queensland as well, with Gracemere and the Emerald Yard, sorry. And then looking south, we still see price dominance down in the south. So again, coming off the back of further rainfall, the Riverina, Central West, still were performing quite good, but of course supply is getting tighter and tighter, and the ability to find young cattle is getting tougher and tougher. Now if we look at where it's come from June to the last month, so you can see already some significant change in terms of price. So prices continue to rapidly roll up, and what has happened is southern Queensland and north of New South Wales, I think that's Casino, Sale Yard, have had the highest prices on a carcass weight basis. So, and then we've seen that kind of price premium shift from the south in June to more northern areas. So a lot of southerners have been looking for cattle from Queensland and also Victoria. So there's more young cattle about in Queensland. So we've seen a larger, I guess, crossing of those from border to border, as conditions are much more favourable down south. So from there, I guess this is a good one to show why the EYCI is doing what it is. So it's kind of been experiencing a lot of short jumps, significant jumps in shorter timeframes. And a lot of that is because of what we can see here. So 1 and 2 aren't included in the pricing for the EYCI, but number 3, so being southern Queensland. So as we've seen more cattle go through that sale yard, high demand, we've also seen price increase. So with that all coming together, then we've seen the EYCI continue to push on to new heights. So what this does is look at a southern Queensland yearling steer profit ratio, and the difference that you would have seen from Jan, June to October to November. So those same periods, the current market rate in Jan was $2.50 for a 250 kilo steer was $2.86. In June, 250 kilos, so same weight at $4.27, and same weight $4.78 cents. And then the average selling weight is around 557, selling at 387 out of Dalby and Roma currently. So you can see just the grey there is the profit out of the total chart, and you can see obviously the total sell price doesn't shift, but that profit continues to get tighter and tighter, and the majority of the work was done in that first 6 months, but we've still seen things tighten off in the last few months as well. And then you got, if you buy 10 head, which seems to be the current rate of transaction, as buying cattle in large lots is quite difficult. Yeah, we've seen that profit die down as well, if you were to buy cattle at the start of the year versus now. And then looking at the Central West New South Wales, so just for a bit of a comparison in terms of regions. what we have here is the same weight, so 250 kilo, and the current rates in Jan was 265, in June 445, and currently 513. And these were the average sell-off now for a yearling steer, or I guess grown steer, is 547 kilo at 375 cents. And oh, hang on, what have I done here? Okay, yeah, 547 cents. I've just stuffed up June. Anyway, that doesn't change anything. So what? So then what? Again, there's a massive drop from Jan to June, 34% out of the total investment and your sell price, which has dropped to 23%, which is more significant just than your Southern Queensland. And then looking at now 19% as well, which if you look at Southern Queensland is actually at 22%. So therefore, it's kind of no surprise that we've seen a lot of southern inquiry into, I guess, the Queensland cattle market. And just a quick look at the heifers, very similar trend as well. So we've seen, again, price dominance towards the north of New South Wales, very small supply down in the Riverina, and pretty scattered throughout. And then if we look at June, again, that kind of similar trend from the steer. Price dominance still down in the south. However, supply has shifted well and truly into southern Queensland and those key the central and western Queensland regions, of those similar factors previously mentioned. And then looking at currently, you can see there, so price dominance in the south of Queensland, and really dominating the amount of heifers being sold, also contributing to the high prices that we've been seeing. This is just another quick reflection of a similar scenario. So yearling steer, yearling heifer, left to right. You can see this is looking at June, so only a few months ago. Price dominance is green down to red, and then of course size is supply is the size of the circle. So New South Wales, we're pretty well dominating price, followed by Queensland and then Victoria. So Victoria, while they have had while they have had historically high prices, again they're still down below the rest of those key regions. And then same thing for heifers as well. So if we shift now, so I've circled Roma, or southern Queensland, but Roma is the key part to that. What changes from then till now? So again, you can see a massive lift in where southern Queensland sits. Their price dominance has really jumped ahead, leaving the rest for dust in the last kind of month or so, with those key Queensland regions leading for steers, followed by New South Wales and some of Vic, and then Vic trailing at the back, and very similar story for heifers as well. And I think this shape as well highlights the relationship between those key sale yard regions and price. So there was a much more linear price spread before. Now things are really tightened up as well when we look at, I guess, beyond southern Queensland. So just a few key takeaways. Restockers paying a premium for young cattle, shift from south to north for those prices, continued low supply in southern areas with restockers looking north for cattle, sharp rises in the EYCI prone to increased demand and supply in southern Queensland yards, held up by a solid base in those southern states, and producers looking to source lower weights to maximise profit as margins become tighter. So that's kind of the key takeaways from that segment. Now we're going to get to probably those bigger questions that we've all been asking. Are we in a herd rebuild? My comment to that is, after a fair bit of reflection of late, I think it's too early to say that we are in a full rebuild. While there's many signs that highlight that we are in the rebuild, such as lower herd, increasing lower proportion of female kill, declining slaughter, record prices, lower levels of production, increased volumes of females bought in the second half of the year, there are a few key things that we need to consider. One is we need to take into account the impacts of COVID-19. So of course, this somewhat muddies the waters as to the international section, and then again, how that plays down to the domestic production. The other one is Northern Australia. So Northern Australia, inclusive of Queensland and the Northern Territory, hold around 50% of the total herd So that's a significant portion, and a lot of that, those key kind of cattle regions haven't seen rain yet. Small drops here and there, but things are still very dry. So I think a lot of the activity in the next few months is really going to help to define the pace of the rebuild, which we just haven't seen yet. So we have seen a lot of restockers going in and buying cattle, feedlots as well, buying cattle out of Queensland as well. There's been plenty of volumes of cattle, female and male, going to feedlots and to processors as well. And of course, rainfall being a key factor as well, with the monsoon season approaching for the north of the country, with the La Nina as well expected to come in. So again, that's kind of to wait and see, but I still think it's too soon. While we are expecting a slight rise in the next year for the herd, I think the pace of that will really kind of bounce off the back of what's happening in the north of the country. And I think things are also very dry in WA as well. So when will the market correct? We've seen prices continue to go to record levels during 2020. The real answer is no one really knows. We're in uncharted territory. It's been a phenomenal year for cattle prices, and we've seen as supply continues to be outweighed by demand, price just keeps going up. But I think, obviously it will reach a ceiling, most likely in there during 2021. But these are some of the factors to consider when the market will turn. So the first one is obviously financial profitability. So prices at the moment, as you just saw, are somewhat sustainable. There are still profits to be made, provided the heavy end of the market can keep up. And as we've seen, the restocker market has continued to rise above in comparison to your feeder and your processor markets. So this is something to watch out for. And again, every farm is different, whether it's a mixed farm, what your costs are as well. I did forget to mention that I didn't include costs in the profit charts. And of course, assuming that Queensland have more costs as well, given the reliance on feed versus the southern states. The next one is rainfall. Again, rainfall is very indicative of producer intentions. And again, we've kind of assumed that we will be seeing above median levels of rainfall for the next few months. In some states that is hit, in others not yet. So that's something, again, very critical. Then of course supply. If supply continues to lower, this should help to keep prices up as well, especially with the current demand scenario. And then of course export demand as well. So again, we've painted a pretty solid picture for demand for the future. I think it's a bit of a double-edged sword for us at the moment, in that we would love to have a massive herd where we can send heaps of product to overseas markets, but unfortunately we're just starting off such a low base. But as I said before, the value of our beef is very high because of our current high prices, which is helping us, stay up. And then of course, some global factors as well with the economy. Again, whether there's a recession next year and the size of that, that'll be something to watch out for. We've seen that this year cattle prices have remained resilient during COVID-19, particularly for young cattle as well, which then in turn triggers an upwards in price for those for your feeder and processor cattle, as well as they make margins. So again, we'll see what happens with that. But off the back of 2020, Australia has performed, I think, quite well. So we'll see what happens and the effects of that as well. So they're the key factors that will determine the performance of the market. And that pretty well sums it up. So if you want to find out more, by all means, have a look at the recent projections. And we'd love to hear any of your feedback on that, along with some global market snapshots as well. And there's heaps of stuff on there, but also feel free to reach out. Here's my contact. Jot it down, and I'm more than happy to get in touch. And can also find people to assist if need be. So thank you for that. I'll pass over to Hillary for any questions.
Great. Thank you so much, Stuart. That was a really great presentation. Gave us a bit of an idea of where we've come, where we are now, and then hang on to your pants, people, because we're not sure where we're going.
Hang
So,
on to you.
sorry. But yeah, so thanks very much for that. Just to give Stuart a little bit of a break, I will let you know these webinars are recorded and will be available at a later date by the end of the week on the MLA website. If you just Google MLA productivity and profitability webinars, you'll be able to find them. If you do have to head off now, you will be presented with a survey as you exit the webinar. It would be great if you could take 2 or 3 minutes to answer the questions on the survey that you will be presented. It just gives MLA, us at Aggregate, and Stuart an opportunity to view your feedback and just make sure that the presentations and the topics are what you are wanting them to be. So if you have any questions, please get them in as soon as you can. Just one of the, but I'm just going through some now. So here's the first one, Stuart. So do you think that beef will be losing ground against the white meats such as pork and chicken?
It's a good question. It's something I haven't actually really thought about in a whole lot of depth, as I primarily focus on the domestic market, but it's a very good question. Losing ground.
In domestic
Well, if we're
consumption?
talking from an Australian, yeah, I was just going to say, yeah. What we've seen is that, I mean, trends for red meat are still very positive. There was a webinar that went recently with a colleague, and the perceptions around red meat are improving. However, I think, you know, if we talk about from a consumer standpoint, obviously white meat, the perception of white meat is that it is quite easy to cook, and it's very accessible and also cheaper as well. You know, I think Australian beef, you know, we are looking to really target those higher value markets as well to kind of help us keep up with those other meats. To say that we're losing ground, I guess off the back of what I've just said, I'd probably say no. Again, being higher value for our product given prices, but again, the ability to be able to tap into those key regions, those kind of trade partnerships as well, will be key for the future. And I guess we'll just have to wait and see what happens with pork, with the pork deficit at play as well. That should be really helpful for red meat as we look to really catch in on the rise of the middle class, particularly through Southeast Asia with the massive boom expected to come out as well. So yeah, I think to answer that simply, I'd probably say we're not losing ground. But, you know, obviously there are some people out there that are kind of keen to take us down. We just have to be on the front foot around that.
Great, thank you. Thank you for the question. The next one has come in. What about Northern Australia? If you could shed some light on the exports, particularly for feeder and breeder live exports, Stuart? Or?
Yeah. So live X, yeah, the live X trade. We're expecting things to kind of settle down over the next few years. Again, I think a lot of what we've been hearing and kind of studying through the northern part is that you know, there's still considerable amounts of those cattle going on boats. However, of course, it's a very tough decision for Queensland and I guess Northern Territory producers who usually hold on to plenty of cattle year on year. Again, the feed hasn't been there, but prices have definitely been up there, which will, I think, incentivize a lot of those producers to sell, whether it's at sale yards or the export. You know, I think the export trade, it looks to be going from strength to strength from what I've been seeing. So, yeah, again, I guess we'll hold on to your hat. And I think a lot of the rain will tell as to what the decisions are to send to live X or to hold on. Hopefully they do see that rainfall, which can help them to rebuild those herds.
Great, thank you. Thanks for the question. Just the one that's coming now, what about, have you any insight into which markets will have new and or increasing opportunities in terms of market diversification?
Market diversification. Yeah, I didn't touch on this. There's what we're seeing in Southeast Asia is an intensity, or not an intensity, an expansion of food and dining experiences. So with that, I mean, if you think about Australia, again, we have a very diverse way of eating and dining. You know, we have all different kind of cultures and foods to kind of eat, which is really good. And I think what we're seeing is more of that as countries like Vietnam and China start to kind of come out of a more of a developing economy. You know, they'll now have the ability to be able to eat more types of meat and to eat more red meat as well, as it sells at a premium to your conventional kind of white meat. So I guess in saying that, you know, we do expect a lot of that diversification to come out of Southeast Asia in particular. Yeah.
Great, thank you. Good question. The next one has just come in. Trade tensions between Australia and China have seen us lose some beef export markets share to the USA. Are they becoming a credible threat?
Look, I'm not going to make any outlandish comments, obviously, but you know, I if I was to view China as a partner, I mean, I think it's a very double-edged sword. I think we've kind of seen throughout the years how we can rely too much on China and how that can act as a kind of detriment to Australia, as we are such a small player with not as much power as, say, the US bears. And of course, we have seen those kind of trade tensions erupt and have had somewhat of an impact on our trade here. And I think a lot of that has come through the US, as we kind of tend to piggyback off a lot of what the US does. So, yeah, I think with China, you know, we've seen South America really pump up their exports to China, which it could potentially come back to bite them if their relationship went south. But I think generally, again, I'm not a politician and I don't really study that space, but yeah, I think Australia just needs to be kind of really confident in the product that we're putting out there, which is the best quality in the world, and just to kind of do everything right to increase the chance of creating value for the future.
Great, good question and good answer. Certainly something we're keeping an eye on at the moment. That appears to be all for the questions this evening. So thanks again, Stuart, for presenting this evening. Great presentation. It will be available online by the end of the week. And again, Stuart put up his details. So if you have any further questions, feel free to get in touch with him. I will see you all in a fortnight for a webinar with Bruce Allworth, who is going to touch on ovine brucellosis. So that will be in a fortnight's time. So thanks everyone again for attending, and we'll see you at the next webinar.
Thanks for tuning in, and go Blues as well. 6-all. See ya.
Thanks, Stuart.